What's up guys, it's Altl Trades here. Welcome to another video. Today I'm just going to be talking about what's been going on in the markets. I think some of you are probably a little bit terrified with what's going on. Look, when I was last on here, we were talking about the 10-10 candle from Trump and how it had really messed with a lot of the actual market makers had been put into the stretcher because of this tweet that had sort of on some coins created candles to the downside of 50%. You know, people being taken out of positions they've held for years on low leverage, and it caused a lot of damage. And we were hoping that this was just sort of a black swan event, you know, low liquidity in the markets, Trump maybe manipulating the markets, and we can recover and look to trend towards the upside and sweep this all-time high at 126,000. But you know, looking at price action, we could see that we formed this high here, and once we swept all the way around, we looked to break the market structure to form a new high. But what happened instead was a liquidity grab on the low time, well, a bearish hammer candle, which indicated sort of that actually momentum was being lost. And if we come down to the RSI, we can see we went from an overbought position back inside to move towards the bottom down here, which is where it's oversold. So market structure did indicate, in hindsight, that things weren't looking good. And I've got a new tool in my arsenal, this 250 day moving averages, which track the price of the average price within those periods. And when you get this golden cross and this death cross, they call it, it indicates basically when the trend can shift. And you can see all the way up that down here we had a golden cross. The lower time frame moving average overtakes the 200 day, indicating that on low time frame the trend's ahead of the high time frame trend. And you can see in these cases the market just moves upwards. So you don't want to be trying to find any shorts, you just stick in your positions. And the minute we got to sort of this all-time high territory, we can see a lot of crosses occurring, and we can see really that the momentum was starting to get lost. And now that we're here, in hindsight, that was one indicator that perhaps at all-time high things weren't going to go much higher. And then a new tool that I've also had the benefit of being in the wealth group and them teaching me about it is the on balance volume tool. So the RSI will indicate the momentum of a coin. It doesn't indicate volume. Now at these highs here, the price was looking like it could go on, you know, as high as we could dream as a bull. And the on balance volume, on the other hand, gave a completely different story. We can see here, right, that where are we on the daily, I believe, here. So whilst we're up at the top and we're sort of in that range around the all-time high, we can see a period of distribution occurring. This is where the whales, the smart money, aren't actually looking to send the price higher. What they're probably doing is exiting the market. And the minute that they decide that they have, got rid of, offloaded a lot of the assets they no longer need, they're going to stop holding the price up. They open the floodgates, and then look, the volume starts decreasing. They're not there buying, they're not keeping the price up. And so a lot of people along this move down here have been trying to buy the dip. And until this finds a bottom and the volume in the market returns, so where they start to accumulate, because this is how smart money moves, they accumulate and then they distribute at the point And unfortunately, retail just get screwed on both ways. And so this tool is a real blessing, and I'm going to have to use it in the future. So this indicator just shows us that a bottom has not come in yet, and as I'm on here, price is falling further and further, and we can just see that we play these support and resistance levels, and it's just difficult to know where a bottom is. But one thing we can note is we're in a downtrend, and then when we combine that with the other macroeconomic things that are going on, there's rumors of a no rate cut, which hadn't been predicted in America. So this is to do with interest rates, and a rate cut would be interest rates coming down. Currently, it's not looking like there is going to be a rate cut, and the odds just seem to be increasing, and the market didn't anticipate this. This is not good for the market, so we're getting this sell-off. And if the SPX, which is the stock market, is having 2 weeks of downtrend, then the crypto market will only have an increased, will only experience even more loss, and that's what's occurring. And so we can even see the Dixie, we were hoping that it would make a leg down, because if we look on the charts previously during the last bull run, money flows out of the dollar. This is how much money is in the dollar. It comes all the way down to 90. We're now not looking to head towards there currently, and we're actually looking to sort of test this resistance above here. So things haven't moved in the trend that I was hoping. Money and liquidity is not flowing into risk assets, and so for a lot of people, they're thinking this is the 4th year of a bull run. I may not have even made money yet. Now, one thing I learned in a podcast from Raoul Pal is that the global liquidity at the moment is not following a 4-year trend, and crypto tend to follow the business cycle. And the point at which risk assets perform is when liquidity is flowing out of non-risk assets into risk assets. And what causes that is government policy shifting from tightening, where they're holding on to assets, to releasing through easing liquidity to the rest of the markets. And so all of these things are going on a macro level. There's a significant amount of debt that America delayed 12 months to refinance. We're talking about huge amounts of debt. Some people would say that the tariffs were brought in to try and sort of get better rates on their finance deals that they're trying to get through. So there's this bigger plan going on here, and just the smart money are not worried. The smart money just look at the flow of money, and they don't get shaken out. They're smart, they take profit, and this is what we need to be to really survive. Remember, I was listening today that inflation, and by the time, if you leave your money in the bank, by the time in your lifetime, it will depreciate by 90% just sitting there. So we have to try and be on the right side of inflation. You need to be making a minimum of 3% a year to try and just track inflation, to not lose money. So it's good to get sort of into a position where you're understanding these things. It's why I'm trying to learn. And so where are we at? So the stock market's pulling back, crypto's pulling back. How can we find a bottom? We have to wait for the OBV to find support and for money to return into this market. It's not there right now. As you can see, the OBV is falling, so we need some kind of ground to be found. And then what I will say is we can even see the total market cap of crypto is just falling. So we might look for some kind of a support around 2.8 billion. And if not, the next level is 2.4. One thing I will say is the fear and greed index. I think I mentioned this in one of the last episodes, but it was around, it was in this sort of orange state. And now we're getting into the extreme fear. Now, if we look into this chart here, when you're in extreme greed, look, we're at all-time high all the time. When we're in extreme fear, this is when you want to be buying, because look at the moves you get from these positions. So this is where I don't want you to be, shaken out. I want you to actually be thinking about, can I get some exposure to this market, and at what point? Do not go all in, dollar cost average. Remember, this isn't financial advice. The page is literally calls a lot to learn trades. I'm marking my journey here, but I'm now thinking about how can I get in at such good prices. I wanted to get ETH at 4,700. Well, I should. Why don't I want it when it's at this discount? You want to be buying at discount. And one thing that really blew my mind was just in a matter of, in a matter of about under 2 months, you're now getting the returns on investments of 70% back up to all-time highs. It's insane. So, not sure we're at a bottom yet, but we're getting to good levels. I definitely would be focusing on ETH over Bitcoin, because I think, ETH 70% from all-time high. Bitcoin is above its 2021 all-time high significantly, even at this pullback. That's where I'd be putting my money. And, at these levels around here on the ETH BTC chart, if I just switch this here, there tends to be a decent reaction. I mean, we want to be selling our ETH around here, right? When ETH is outperforming Bitcoin, that will happen again when liquidity in the markets change. So, got to be patient. We've got to be patient. We've got to be smart. That's where we're at in the markets. It doesn't look pretty. It doesn't, but you just got to kind of be calm and think about things practically. And let me know if you have any questions. I would always be happy to answer any. And I just thought I'd upload this just to document sort of what I've learned with the EMAs, with the OBV, and sort of where we're at in the markets. And I hope you learned something. So speak soon.